Most people hear the word investing and think it's complicated, risky, or only for rich people. But it's actually much simpler than that. Investing is just a way to make your money work for you over time. In this video, I'll explain how investing works in plain English, with simple examples and no confusing jargon. Welcome to Finance Made Simple, where we break down money topics so they actually make sense. At the most basic level, investing means putting your money into something with the expectation that it will grow in value over time. That something could be a company, a fund, a property, or another asset. The idea is simple. Instead of letting your money sit still, you give it the chance to grow. So why do people invest? The first reason is growth. If you keep money in a normal account, it may not grow much. Investing gives it a chance to increase over time. The second reason is inflation. Prices go up over time, so money loses some buying power. Investing can help your money keep up. The third reason is long-term goals. People invest for retirement, a house, a child's future, or just to build wealth step by step. Let's make this real with a simple example. Imagine you buy one share of a company for 100. That means you now own a tiny piece of that company. If the company grows, makes more money, and becomes more valuable, other people may be willing to pay more for that share. If later that share is worth 120, your investment gained 20. That is one way investing works. You buy something at one price, and if it becomes more valuable later, you can profit. But the opposite can also happen. If the company struggles, the share price may fall. That's why investing always involves risk. You are not guaranteed a profit. You are making a decision based on what you believe will happen over time. A lot of beginners think investing just means buying stocks, but what you're actually buying depends on the type of investment. If you buy stock, you are buying a small part of a company. If you buy an ETF, you are buying a bundle of investments. If you buy a bond, you are basically lending money and getting paid back with interest. If you buy real estate, you are putting money into property that may increase in value or generate rent. Different investments work in different ways, but the core idea is the same. You put money into an asset and hope it grows, pays income, or both. Now let's talk about risk. A big rule in investing is this: higher possible reward usually comes with higher risk. Safe investments usually grow slowly. Riskier investments may grow faster, but they can also drop more sharply. That's why investing is not about picking random things and hoping for the best. It's about understanding what you're buying and how much risk you can handle. One of the biggest secrets in investing is time. The longer you stay invested, the more time your money has to grow. Even small amounts can become much larger over many years because of compounding. Compounding means your gains can start generating their own gains. So instead of money growing in a straight line, it can grow faster over time. This is why many people say the best time to start investing was years ago, and the second best time is now. Most beginners do not start by picking single stocks right away. A simpler approach is to begin with broad, diversified investments like index funds or ETFs. Why? Because diversification spreads your money across many investments instead of putting it all in one place. That can reduce risk. For many people, the goal is not to beat the market every day. The goal is to build wealth steadily and avoid unnecessary mistakes. Beginners often make a few common mistakes. One mistake is waiting too long to start. Another is investing without understanding what they bought. A third is panicking when prices go down. Markets go up and down all the time. That does not automatically mean something is broken. Sometimes the hardest part of investing is simply staying calm and thinking long-term. Here's the easiest way to think about investing. You give your money a job. Instead of sitting idle, it goes to work in assets that may grow, pay income, or both. Your job is to choose the right level of risk, stay patient, and keep learning. That's really the foundation of investing. So if investing felt confusing before, I hope this made it feel much simpler. You do not need to know everything today. You just need to understand the basic idea. Money can grow when it is put into the right place, given enough time, and managed with patience. In the next video, I can explain what a stock is, what an ETF is, or how compound interest works step by step. If you want finance explained in plain English, subscribe to Finance Made Simple.